Okoyeme Philip is my name, and I felt like I should just take you through the one of these indicators that I shared with you the other time, and which I'm sure some of you have been using before. Actually, I added one other column to it, which is not in the one that the fashion that you have with you now, and to actually explain to you what this column is doing there, what it will be doing for you. Okay, here is the indicator. Some of you that have been using it, you will be one way or the other familiar with it, or you have been seeing it before one way or the other. Okay. I said it before so that the indicator is meant for lazy traders. Well, not lazy traders as such, but traders that one way or the other that may not be able to analyze the market very well on their own, and how to draw all these high lines and trend lines and all the likes. Okay, the indicator will be useful for you, and with it you'll be able to make pretty good money. Okay, but one thing that is crystal clear here is that anything you don't practice, you might not be perfected at it, but once you know how to practice with something, one way or the other, you get your way around it, or your ways around it, on how to be using it to make money. Okay, it is very good. It is a very good indicator. Like I said before, that the other time also, don't use all those open source indicators. Most of those ones that I'm using nowadays, anything you can see on my chart, most of them are not here anyway, but most of them I developed them on my own, and because the open source ones can be easily manipulated by the big financial institutions and all those big traders that actually move the market, in the sense that they can actually trade against you and mop out your own liquidity in order for them to be able to make more money from the market. Okay, that's on the subject of today anyway. Now here is the indicator. Look at USDJPY. The first column is the actual reading. The second column that I've just added to it is what I call the average, like when we are talking about class average and all the likes. So this is the average reading, and what it does is that, or the essence of putting it there, to be able to know when actually to enter the market, number one. Number two, whether we should keep our position, opened position, to keep on running, or we should close them. Okay, this indicator will tell you, or will alert you on what to do on the both cases. One, to open new order. Two, to keep the existing order running, or to close it, or to close them, whichever, if there are many. Okay, now if you look at USDJPY here, we have a 0.06 here as the actual reading, and the other column I'm talking about now is 0.06. So what it means is that it is not advisable to buy this market now. Let me explain to you. If you want to buy, or you want to stay in a buying position, this reading, the actual reading, must be greater than the average reading. Listen to me, I will say it again. The actual figure here, which is the actual reading, must be greater than this one. The higher the gap between this and this, the better the position it is for you to hold the position. The narrow the gap between the two, this and this, that one is showing you that you need to come out of the market. Once the gap between this and this becomes very narrow or very small, like 0.01 or 0.02, you come out of the market. But like this one, we had the same figure, the same readings for the two of them. This market is not good to stay at buy. In a buy position, and it's neither good to stay in a buy position nor in a sell position. Actually, it's buy, because you can see that the figures are positive. Okay, but it is not good to buy. The same with Euro USD. Euro USD on Friday actually bought very well, but towards the end of the trading session on Friday, it came down. It traced down or back, and that is the reason why you can see 0.23 here and 0.23 here also, showing you that you don't need to buy or to stay in this market. Let's go to the next one, USD SUS. The same thing, USD SUS, and the same thing with GBP USD, the same thing GBP JPY, the same thing this and this and this. But when can you see now GBP SUS? GBP SUS has minus 0.29 and the average reading is minus 0.14. So GBP USD is very good to stay at the selling. Okay, stay with your selling position is very good at it here. If you look at this one, by mere looking at the figures we have here, and you can see strong sell here. Okay, here also we can see strong buy and strong sell. But if you look at these figures here, the average figure showing you that it's not ready to continue staying in this market, because the average and the actual reading, the two are the same. Okay, and on many occasions you see that the average reading will be more than the actual reading. Once you see something like that, you come out of the market. But a market like this, you can stay inside it. But now let's come to Euro JPY. Say Euro JPY. The actual reading is 0.01, but the average reading is 0.02. So which means the average reading is more than the actual reading. So in this market, the buyers, they don't have enough strength to push the market forward, or the market if the market just starting up early in the morning, or when the market just opens, you might see something like this. Okay, but at any time you see something like this, maybe midway when the London session has started and New York session has started, so you don't keep on holding such a position like this, because this position is telling you that the sellers are prevailing, gradually prevailing over this position. Okay, if you move down to Euro we have minus 0.05, and for the average we have minus 0.02. Okay, this one is still good to keep the selling being in selling position, but the gap between the two is not that too wide, but you can still keep it anyway. All right, if you now move down to Euro NZD we have 0.34, and this one is good, very heady. We can continue staying in our buying position. So USD card also is not giving us a convincing figure to stay in the buying position, because the average reading and the actual reading are the same. The two of them are the same, and we don't want to keep such a position. We come out of the market. CAD JPY is good, stay in our selling position. SUS JPY is not good to stay in the buying position. Then NZD JPY is good to still be staying in the selling position. NZD USD is good to still be staying in the selling position. Then NZD card is not good to stay neither in the selling nor in the buying position. Why? Because the average reading, the actual reading is bigger than average reading, and the two are negative. So which means we don't have a convincing selling order or position here. Neither do you have a buying or something. So the sellers are weak, and the buyers have not come in. So in such a situation, you stay away from the market. Okay, now what I'm just trying to say is you use this second the newly added column to gauge the market, whether to stay in the market or to come out. And this one will help you a lot to know when to come out and when to actually be holding your position. But I still need to say this one, that being the fact that these two, this one and this one, give you very big gap or a very high reading, does not mean that you should not obey the laws or the rules of supports and resistances. You still need to actually look at that and make sure that, because this one, the support and resistance, or supports and resistances, they are leading indicators. They will tell you what's going to happen ahead. Like for instance, if you take at this place now, this is a very good demand zone, because in the past this area have been tested more than 4 or 5 times. Okay, it's one of the things that I've checked before. So if you look at it in the past, the area have been tested before, or time with that number, and with that we know that anytime that price gets back to such a region, there's going to be a kind of reaction. On many occasions, if you are going up like this, you are coming up, the buyers will have been waiting for you in that place. The sellers. Once the market gets to that place, okay, the sellers will just swing into the action, okay, short the market at that demand zone. Okay, I just want to see the places where it has been tested before, but I think we may not be able to ascertain that one now. But your own, you should be able to draw the lines and make sure how many times the line, I mean the place, actually the zone now have been tested before, and you are seeing a kind of bounce back. And this one we need to say it again, although we are not taking that one today, but I will explain it later, possibly in another video. In a situation like this, we are not just dealing with a single line, we are dealing with a region. Can you see what happened here now? This one, the wick up here did not get to this place. So anytime, any moment the price comes around this place, because in this place now, the market reversed in this place before and moved down to this place before picked up and came back again to this place. So from here to this place is a zone. Anytime you are trading, once you get to a kind of something like this, a swing high that is like this, like I told you before, market will test all this high that you are looking at. One way or the other, market will come back and test them to see maybe it can go through it now. Okay, and that's exactly what happened in this place. What happened here? Can you see this one now? Market came back but moved ahead of it. In fact, the closing of this one, of this market, is more than the high of this one. You might be tempted to think that this market is going up or this price is going up because it has already closed a little bit ahead of this place. No, this place, everything here is a zone. So once you get to that zone area, you know what to do. Despite the fact that you are having a very big gap between this and this in this place, okay, once you are approaching such a demand or supply zone like this one, okay, you actually manage your positions very well, either to exit the market or tighten up your stop loss so that the market will not reverse against you and wipe out the profit that you have made. Anyway, so what I'm trying to do, to say in summary, or to put across to you in summary, is that this newly added column will help you to gauge the position that you are holding, maybe to continue holding it or to come out, and maybe to enter the market or not. Once the gap between this and this is something like 0.03 or minus 0.03, so you can enter the market. And once the gap between them is lesser than that or less than that, you come out of the market as well. Okay, ladies and gentlemen, if you have any question or questions based on what I've just explained here, put forward your questions and I will answer them one way or the other. Thank you and God bless you. Okoyemi Philip is my name, and I